Good evening, folks. Welcome to TopGunStockTrading.com daily analysis video for Tuesday, January 14th, 2014. All right, folks, let's get right into it. What a day on Wall Street it was. The Spiders bounced back, the Dow Jones bounced back, as well as the Russell 2000. All had big bounce days. So what does this all mean to us? We talked about the downside action coming in this week, and we had it yesterday, and now we also talked about that bounce coming in. Obviously, you didn't expect to be such a large bounce, basically recovering almost 80% of what was lost yesterday. As you can see, yesterday came right into that support level. I've had this line drawn in there for almost a week now, and that line's about 181.75 to 63. You can tell it's not a perfectly straight line or a horizontal line. So 181.70, we'll call it, split the difference. And you can see yesterday as low as 181.34 and basically closed right on that line at 181.69. I said there's going to be some support, that minor support there, and expect a bounce again. Pretty large bounce. I don't think anybody could have predicted that. But looking at the volume trends, yesterday we sold off on 150 million. Today we climbed back up and rallied at 100 million. So about 2/3 of the volume on the way back up. Shows that the little guy is involved in this, and the institutions have basically stepped aside. Let's look at the 10-minute chart to kind of get an idea what exactly is going on in this market. What can we get out of it? Looking at the 10-minute action, we talked about uh, these three gap ups. If I can bring them up here. So you can see here, this was yesterday's action, and then last week, the 4 days last week, we had the gap up, and then the basically the four sideways days of trading last week. And we talked about last week on the 9th and the 10th, we have this gap up and a sell-off higher volume than usual. I won't go over that again. It happened again on Friday, and then yesterday we had basically the sell-off to the downside on 150 million. Today we had the gap up and kind of the slow, steady rise. The media will tell you it's because of the consumer confidence levels and consumer spending for the Christmas season. I will tell you that the news comes after the market moves, and the media tries to fit the news to match the stock market action. So you have to avoid all the hype again. I just put out an article about the media and its effect and its market timing on this market. So avoid the media. Use it as a barometer of what's going on, maybe a contrarian indicator, but by no means you can't trade off of what the media is putting out. And does this move today make me change my mind about my view on the market? No, I'm still bearish. I still think we're going down. I still think the next couple of weeks are going to be weak. What's going to change my mind? If we can get above these highs made yesterday and the two previous trading days, then I might go to a neutral stance. And then obviously if we get show any more strength, getting above this all-time high made on New Year's Eve of 184.68. If we get above that level and confirm above that level, then I will certainly change my stance and go into a shift in a more bullish, positive outlook on this market. Otherwise, I'm still on the bearish side of this market. One other thing I wanted to mention, we talked about trying to get on a trade yesterday afternoon, and we said, hey, it's the market's already sold off. We're not going to chase, and this is exactly why we don't chase our trades. We set our entry point or set our entry time that we want to look to get into a trade. And yesterday I said it was going to be yesterday afternoon. Hey, the market was already down. And then I talked about, hey, we're not going to chase. We'll get a bounce here, get some inside bar action, wait for the timing, and then maybe try to sell it short in the next couple of days. All right, so we're still looking at that. Again, I'm going to hold off on my trade short to see what kind of action we get on this market. This is a pretty strong move to the upside. However, it was lacking some on volume. So do I believe it? Well, it happened, and you can't fight the tape. It is what it is. So we'll see and be patient on that trade and let the market come to us and let our trade come to us versus us trying to force a trade on the market. So going to USO. Well, it had a up 23 cents, so not a big move there. It's kind of chopping around down here at the lows on this market, this double bottom. What's this tell me? It's setting up, building up pressure, possibly go lower. No defined trend on that. Again, I'm not comfortable. I talked about yesterday. Taking this trend line might not be the trade. Again, we'll wait for oil to give us a signal. We'll read the charts. Let the charts again, the trade come to us. I'm not going to force, like I said before, I don't force a trade. So we'll see what the chart looks like. But again, this is not going to be a valuable, profitable trade in my eyes, or a high percentage trade in my eyes. Trading this trend line right here because of the consolidation. Moving on to gold. Gold had a minor pullback, still has some bullish consolidation there above the 50. Actually closed below the 50 today, but no big deal. You can see this first up move and then this sideways to downward consolidation. Again, looking like a in spirit up bull flag. It popped up, and then you get your sideways consolidation coming down. So it may consolidate here for another day to build pressure to make another run to higher. My level 123.62 on gold. I'll be looking to put a possible short trade on that at 123.62 for gold. Again, I'll look at it when it comes into that, what kind of price action it has. Again, it's not a definite level, but again, you need multiple dimensions to your trade, not just price. You need what kind of pattern, either the candlestick, a single candlestick make, what kind of price action it has in it, what it looks like, or what kind of multiple candles, what kind of pattern multiple candlesticks make, and that'll give you your pattern. And of course, the third dimension there is going to be that timing. And again, the proprietary timing numbers there at Top Gun StockTrading.com, which I won't mention on the free videos. But again, I'm putting together that webinar to inform the average investor on what's going on to be a profitable trader. All right, so that's my gold. I'm gonna wait till it gets to the top. I can see this 20 moving average just weekly is about that same level with some pivot highs and lows coming in there as well. And there's a Fibonacci retrace there. It's a 382 retrace as well. So I got a couple factors in there. We'll just see what kind of pattern it comes in there. I like to get 3 dimensions out of every trade. That gives me about an 80%, 70-80% success rate. The 3 dimensions, you know, the pattern, the timing factor, and then the price action that it comes into. So we'll see how that comes in. A couple moves today on some stocks. Probably the biggest mover that I could see was going to be Tesla. Tesla got a huge bid today, up 22 points, 15.75%. Must have been some news out there. Again, I don't follow the news, so I don't know what the news was. It doesn't really matter. What matters is the price action on the equity, and that's at the end of the day, that's what either pay you money. I'm thinking just off the top that this gap fill up here, I believe this was an earnings day or the day before earnings. This gap fill or pierce of 180 level is a stone cold short for Tesla. Again, we'll see what kind of pattern we get into here. We talked about the number 3 the other day as being a pretty significant number in the world of trading. If we can get a 3-bar surge, a 3 green bar surge up into that price of 180, that'll be a stone cold short for me. How am I going to play this? Being a high-priced equity, not a big fan of the straight shorting. In other words, selling the shares. I'll probably look to put a vertical spread, uh, sell a vertical spread on this equity, probably a 190 to 200, or excuse me, 190 to 195 vertical bear call spread if on a Pierce of 180. Again, we'll reevaluate this trade in the next couple days. Obviously, there was some news out today or something went on to have that stock go up that much. Again, we're looking for that 3-bar surge into that gap fill to get that short off, and I'll put that up on the Fox 3 alerts as a possible short for Tesla and a Pierce of 180. I'll also refine that entry price so we can nail it on that entry price and look for a pullback there. All right, there's Tesla. Looking at Apple. Apple had a pretty good move the last couple days. You can see my price point here coming in 532.21. Yesterday it came, actually 2 days ago, it pierced that level with a 531.11, and then the day before it went to as low as 529.88. Pretty good level, 532.21. It would have been a good buy. I didn't put it out. I didn't take this trade myself. It was just a master level that I had that I was messing around with to see, using different techniques to come up with master levels here, and seem to be doing a pretty good job nailing these master level on a $530 equity. Coming within, $2 is pretty good percentage there on making that trade. So nice bounce in Apple. Where's my short level on Apple? I think a short level, I'd have to calculate this out. But right now, just looking to this equity, I wouldn't short this thing till about 570 just off the top of my head, evaluating this thing as right now. You may have some resistance here at the 553, a Pierce of 550 using this red bar high here, as well as this 20 moving average. But that would be minor resistance there. I think 570, I wouldn't touch this thing unless it got the 570 as a short. All right, there's Apple. Amazon, I'm eyeing up for a short as well. Pretty good bounce back day on Amazon. As you can see, there's a 3-bar surge like we talked about to the downside. Came into double bottom here, made last week. A low here at 388.42. Yesterday's low, 388.45. So pretty powerful stuff there if you know the candlesticks, know what you're looking for. Within 3 cents of the low, and now you're back up to 397. About $11 on a $400 stocks, almost 3%, 3% move in one day if you can nail that entry price there. Okay, where's this stock going? Hey, I'm looking for this thing to go upwards. I got a trend line, 2 trend lines here. Right now, it's about 408.47. That's so close to 410 that a nice even number of 410. I might wait to the 410 to get that stock. A Pierce of 410 on Amazon. Again, I'm throwing out these numbers, and I will monitor the trading action, the price action as these stocks, equities get into these prices. So they're not stone cold. They're not, they're not for sure trades right now. They're just price levels. They're one dimension of the 3-dimensional system that we use. So if they're basically, those levels are 50% success rates. You want to get to 70-80% success rates. So every dimension you can layer your trade with increases your odds of being a profitable trader. So that's what I'll be looking for in the coming days, is those other 2 dimensions to try to match up to get that trade off. What else we got? Google was a high flyer. They announced they're buying that corporation Nest. Hey, they're at an all-time high here, 11.51. It's tough to short stock at an all-time high. It's almost it's a fool's game trying to do that and trying to pick those levels. So what I like to do is wait for a pullback on a stock, a big wide range red bar, and then have a inside consolidation. Wait for a timing factor there in order to short. With Google, you don't have that. It's at all-time high again. I wouldn't touch Google until I get some definite sell-side action to have some levels to go off of. But you got to tip your cap to it. it is a solid, strong performer. Anytime you get the moving average spacing here, and the price above moving averages with pretty wide spacing, that's a pretty strong stock to even think about shorting there. I'd stay away from it. Caterpillar, I sold this at the open here. I sold or bought back my spread for a minor loss. I think I lost 50 bucks on it. No big deal. But we're just getting too close to the expiration date. I don't see it being profitable. I think the decay rate's gonna get me. Even though I do like this inside bar, it did close above that red bar high, $90.30. Did it close above it a lot? No, by 26 cents. So still needs to confirm above it to convince me that it's going higher. But as far as I'm concerned, this is a no trade, not a tradable pattern right now because it closed above that red bar high. So I moved out with the timing considerations coming up this Friday with Options X as well. So I'm out of Caterpillar for a small loss. KMX I was long. Again, this pattern I actually sold it at 45.80, I believe, for a small profit. I think I made 1.2% or whatever it was. Nothing big to write home about. Basically paid my brokerage fees and bought my family dinner for a night. So nothing to write home about. What I didn't like about this trade was it was a good level. But it's setting up in spirit of bearish flag here. It's setting up to go lower, building pressure to go lower. So my next level for this stock is going to be 41.52. And again, we'll see how how it comes into that level as well. So as you can see, one of my dimensions, we talked about a lot of them here, was a 3-bar. Now this wasn't really a surge, because you call a surge to be a wide range bars, but just a 3-bar down, 3 straight down days into that level. Usually would get you some type of balance into that master level, but basically just kind of cushioned in here and just started moving sideways. So there is support at that level. I think it's building up pressure to go lower. And again, my next buying opportunity is going to be down here at around the $41 level. I also moved out of Clint today. It was down 11 cents. I moved out at 5.44, I believe the price was. So I moved out for a 20-cent loss. I think I lost my 30 bucks or something like that. Nothing big. I didn't have a big position size on this. Basically, it closed below these moving averages. It closed below this green bar low of 5.43. So I don't like the action on this at all, so we'll see how that moves later, but I am out of Clint as well. Taking a look at DXM, Dex Media had a pretty good bounce back day, up 5 1/3% or 31 cents. Did it get above my trend line? No, not yet, or it might have closed above just by a hair. So I wouldn't say that that's a convincing close back above that trend line. I'll give it the benefit of the doubt and say it is at least on that trend line. So start the confirmation process all over again. But this will be something to watch. If we can get some more, I'd like to see it get above this 20 moving average and do some consolidation for a move higher there. But we'll keep monitoring that. We're still in this position. Again, these small caps, not a large position size at all, and that's to mitigate the risk. I wrote a big, not a big article, but a money management article on the blog there. Take a look. Take a look at it. Check it out. It's on about money management, managing your position size, and checking your emotions at the door. And that's how you do it, is by managing, controlling your position size. J.C. Penney's, I'm eyeing up. It was up 21 cents today. It's starting more bearish. This equity is weak, very weak in my eyes. It's below all 3 moving averages. It's had some gap downs, had some wide-ranging red bars, relatively speaking to the price of the equity. 624. If it continues to consolidate right here, I think it might go lower in 624. I'll be looking to buy it at a Pierce of 6 again. We'll wait till it gets down that low, but pretty weak equity here. I might decide to stay away from it. Dry ships. Nice little bounce back here. It did push up higher, but it got pushed back down. So Again, a weak equity. I'm not seeing any strength in this equity right now. I'm right at break even on this stock as of today. So I'll monitor this. I'll monitor this pattern. And again, if I don't get any price action, boost to the upside soon. Probably next week I'll look to make a decision on this stock, whether I'm going to move out with a break even or let this trade ride. Again, these small caps, dry ships. If the market gets weak, these things most likely will be weak as well. So on a huge up day out of the market, this thing only moves up minimally. Quick. It did have a market moved up 1%. It went up 1.66%. It was up a lot higher earlier in the day. We'll monitor that position as well. WEN had a big bounce back day as well, as did all the stocks really. I'll quickly move through the rest of them here real quick. Hey, this doesn't close above this high. If we get confirmation above this high, then I'll move out of this trade. But this was a pretty strong reversal day. We talked about yesterday, this could be a top in this equity, almost a topping tail on that. But today we get that wide range reversal bar, almost negating all this tail here, this wick. So if we get a confirmation above that high is where I'll be moving out of this trade. We'll again monitor that trade. Quickly, Boeing had a down day, came down and touched that 20 moving average. This stuff is powerful. 137.88 is the 20, and this low was 137.80. So if you bought that 20, if you're paying attention, you bought that 20. You made about $3 on it, or just under. Let's see. I can't do that math that fast, but it's under 2%, or just at 2% there. 2% gain today if you bought the 20 there. So is it when I bought the 20? No, I think that's it's hit it a couple times. It's chopped through a bunch of times here, so I'd say that's a minor support level. So hopefully we can get some more downside action in this stock as the weakness comes into the market this week and next week. FedEx had a move back up to 142.70. Again, I'm looking at this red bar high right here. If it goes above 143, confirms above 143, I'll be moving out of this trade. Again, this equity, my vertical call spread expires at the end of the week, and this hopefully this bear pattern and spirit up bear flag plays out to the downside, and we can capitalize on that trade. Looking at Yahoo, Yahoo again moved up, racing back up to where it closed at or opened at yesterday. So we're still looking at this trade. Again, if it closes above this 41.72, confirms above that high, I'll be looking to move out of that trade as well. BAC, another 2% move. The financials did pretty well today. Market goes up 1%. Bank of America goes up 2%. We'll monitor this trade as well. It looks like some sideways consolidation again. This is at the top of the chart, and most these bull flags at the tops of charts have a high failure rate. So we'll see, especially you see this whippy action, wide-ranging bars, both red and green today, shows you there's a lot of indecision, a lot of shaky hands in this equity. So we'll see how that maneuvers. They have earnings coming out tomorrow. Usually we don't play earnings, but if you have, very rarely will I ever play earnings. It's just a gamble, to be honest with you. This strong action into earnings tells me this equity may go the other way. If it's strong into the earnings, usually stocks will be weak after their earnings, just because the expectations are so high. So as you can see, this equity, since the last time they reported, let's see, just in October sometime they reported, and as you can see here, it was at $13, and now it's up over close to $17. So $4 move. That's almost 25% move since their last earnings. So it's up pretty much into earnings. So we'll see how that goes. Again, I have a call spread, bear call spread on this, so I'm not too worried about it. My risk has been mitigated. All right. So how do I think about this market? What are my outlook? Strong move. I'm still bearish. I still think weakness is going to come into this market. It didn't recapture the highs from yesterday. It's still inside this red bar. It moved up on 2/3 of the volume. It moved down. So this is the little guy buying the dip mentality, buying this market up, and institutions are just happy to see that happen because when it gets up here higher, they're just going to sell it down again and unload their positions. Sooner or later, they're not going to have any positions to unload, or the buyers will have run out of money, and the institutions will continue to unload, pushing the price of the markets down. And that's what that's my belief is that will come in March, but this is just a minor cycle date. All right, so I'm still near term bearish on this market. In other words, I'm negative. I think the market's going to have some more weakness come in over the following next couple of days, end of next week, until it finds some support, possibly down at this trend line or even at this support level at 177.43. All right, thanks for being members here at TopGunStockTrading.com, and we'll see you on the charts tomorrow.